Today we're going to review the UK inflation data. Yesterday we had the UK employment data, and to provide a quick summary on that, we saw that unemployment fell by 0.2% and we also saw a cooling within wage inflation. Now, those two components are important things for the Bank of England to consider when it thinks about setting its monetary policy. Now, a third and also important component for them to think about is inflation, and we've had the latest data from the UK released this morning. So, looking through the numbers quickly, if we start with headline inflation, that came in at 2.2%, so slightly higher than the reading we saw last month of 2%, but importantly for financial markets, it was below their expectation of 2.3%. If we look at core inflation, where we strip out more volatile components within the basket, such as food and also energy, we saw that that rate came down to 3.3%, with markets expecting that rate to have been 3.5% before the data was released. Now, what we also know within that inflation report is it's built up of two components, being goods inflation and also services inflation. And we know through most developed market economies, post-pandemic, we've seen that services inflation has remained the higher part, and that's what's really kept inflation high, but also sticky within these economies. So what are we seeing from the UK from today's data? Well, that trend continues where goods is much lower than where we see services. Goods inflation is actually in a deflation regime where we see prices falling, and that came in at negative 0.6%. Whereas when we look at services inflation, it's a lot higher, but like some of the other data that we've mentioned, it's moving in the right direction. So that came in at 5.3%, which on a historical basis is still fairly high and elevated, but when we wrap that in the context of the Bank of England had been expecting that to be 5.6%, we can see that inflation is moving in the right direction. And to provide some more additional context, that's the lowest rate of services inflation we've seen since June 2022. So inflation moving in the right direction for the Bank of England. Well, ultimately what we want to do is think about what that means for asset markets and financial markets. And this data mainly plays through in the bond market for fixed income instruments such as UK government issued gilts. We've seen that gilts this morning have reacted positively to the data and have seen yields fall, which means the price of those instruments has risen this morning. And when we look at what financial markets are expecting, they're now forecasting come year end, we should see an additional 50 basis points cut in interest rates in the UK. So that would take us from our current rate of 5% down to 4.5%. So thank you for watching today's episode, and we'll catch you in tomorrow's video.